Good day, good day. Okay, so in this section, we're talking about the back testing. I've talked about this for many months now that I do believe that the days of killing yourself virtually to develop back testing, we're done with that because AI now, if you're willing to put advanced AI in there to to allow AI to generate the back testing for you. Now, usually I do it with Python Streamlit app. I'll go in that in another video. This is new that I'm using with JavaScript. Um, so I'm going to show you that. I think I played enough with that, um, with enough with my introductory video to the course. But this is the video that's specific to this JavaScript coding. So I'm not a big fan of JavaScript, but my views radically changed on JavaScript because of AI. I do think that AI enables, or sorry, JavaScript is pretty good for the web front, and you can create some really nice looking charting and all that. Um, and here we're using everything's all open source, 100%. Everything you're seeing in this whole package is 100% PDFs, the files, the code, everything 100% generated by AI. Okay. So here's all the different breakdown on this coding for the JavaScript. So these are the features that we've included. I think it's about 2,000, maybe 3,000 lines. Let me just verify that here. Um, so in my case, I'm very different. I think when it comes to coding, let me just see here. I'm using Sublime a lot. So so we'll use Sublime, the old school editor. We can see here this is all 100% generated by AI, but it's so sophisticated. It generates nearly 3,000 lines of code. I don't do that to show off. I'm just showing you that AI is very, 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 very powerful. So again, this isn't using the analysis with the prior set of documents, all the different trading secrets stuff or quant trading. But in this case, I don't know why the AI focuses more on technical analysis. So you can see here it's using, I could load in a CSV here if I want. It's using the 1 minute data. Again, here I've shown in the data folder using this one right here, the 1 minute. So coming back to this with the architecture. So let me just load this up again. So just do a right click for all the newbies, open it up with a browser. I don't know, maybe, I don't know, whatever you're used to. That's one thing I do like about HTML and a JavaScript. So here I'm going to again use just generated data. Now here, I don't know why, it gives you all these different assets, but obviously we're focusing on Bitcoin, simulated. We could go tick or sorry, a lower time frequency if we want. Um, we're just using 1 hour. We have different types of strategies here. Again, this is more um, retail via retail technical and fundamental analysis using momentum, mean reversion, breakout, trend following, and volatility. These are pretty popular ones that a lot of the retail traders will use, or the quant wannabes as well. The look back period over 20 hours, 20 days, depending upon what the time frame you're using, along with the initial capital and the commission rate. Let's say a Bitcoin could be 0.1% for commission. I can't remember what's Kraken, maybe 0.15%, and then that's per round trip. And then let's say Coinbase could be as high as 0.5%, so you can adjust it there. Run the back test again, done. You don't need to code up like a lot of people have used in the past, which is fine, I guess. But what we're looking for is a sharp ratio. But because, as I shown earlier, on the real market conditions of Bitcoin, where it has declined and then it's gone flat. So obviously, we're not going to get very strong returns Very low Sharp ratio as well with a max drawdown. This is kind of tolerable with this current data set. Let me see if I can load in real data here. So hopefully, maybe this might work. Um, yeah, let's just see if I can access it this way. And again, we're running this within Windows. Um, so we're going to go to the appropriate data. So we're going to load in the 1 minute. Let's see what it comes up with. So it did load it. So we're going to process it. So here you can see since November, it's very flat. These are very, very hard trading conditions to deal with. We're not going to deflate. There's going to be no momentum strategy applied to it with a very low Sharp ratio. It's trying to estimate it's going to be a 25% return, maybe, maybe not, and still have a 46% win ratio. But if you start going through, I don't know, breakout strategy, let's see what that would be. Um, yeah, it's negative. Let's try another one. Uh, Volatility breakout. Okay. So you can always generate on how you generate the code. Yeah, so there's no performance in this at all. But if I look back, I don't know, 500, let's see if that changes anything. Um, yeah, a little better, but still not that great. Okay, so here's our last price. This is real world data at this time frame, as I've hinted at early January. Here's our performance, not very good. We've had some peaks here where it was above 100,000, but generally it's below. Um, so we have our risk analysis that we can apply as well. Not much to tell here, but if you're always in a drawdown, obviously it's not the right type of strategy. Let's see if we can change that. Let me go into a 1 minute time frame. Let me just see if that may change everything here. Not really. Okay, so I don't know. Let's say trend fall. None of the mean reversion. Mean reversion would be your best strategy because it's flat. So that's your best strategy. So we may get better results here. Kind of better, slightly better, still negative. Um, but again, you see more positive signals there as well. So that's not so bad. But we're still losing not as much as we have before using mean reversions. That's the better conditions. So again, we can check out our signaling here. Okay, again, real world data. And here's the current price, the strength of the signal, the P&L. It's really powerful here. You can do comparison. I'm not sure if this will work. Let's see if it does. Yeah, there we go. Awesome. So here, what it's telling you is that for this particular data set, we could actually get really good return using this trend following. Surprise, surprise. Everything else would be either flat or negative. So knowing that, there's a couple of things we can take away here. So our momentum, um, yeah, our momentum. I don't know why it's saying here still negative. Sharp ratio is still negative. Max drawdown still wild, but the trend following's minimal. So here with the trend following as is, we make a slight positive Sharp ratio. The data I'm showing is um, probably the hardest, most difficult trading scenario out there. So in this case, we know that we could have a win ratio for the pittance of 0.32 Sharp ratio among 45 trades. That's a very strong win rate ratio. I will say I've seen some blended futures and options strategies where you can get really exceptional trading performance because you have a win ratio as high as 90. The highest I've seen is 97%. All right. So that's pretty strong, but still overall, it's like not strong enough over the long run. If you look at the forecast, again, this can be wrong. So let's say, yeah, 30. So we're using 30, 30 minutes. So let's try to figure out, I don't know, 30, uh, 30 minutes. So let's just say, simple as this. I don't know my math. If I go 24-hour over 30, so it's minute data. So if we have 60 uh, minutes over a 24-hour period, we can get our calculation. Let's try this 1440 periods. 1400 periods here. So for let's say 1440 for a full day. Let's see if it does it. Monte Carlo. Let's see how it looks. So again, it's I guess it's anticipating. Here's the dates going out to July 29, where it's could be flat, or the lower bound would be 81,000, and the higher bound would be $753. That's the pricing. Okay. Um, Again, is this the best model? What about linear regression? Again, not the best, actually worse. So again, this is never accurate, but just gives you an idea. That's your jig. So that's pretty well the JavaScript application here, which is pretty strong. And we'll now move into the Python, which is much more advanced.